Welcome, friends. The law of nature is pretty straightforward. Nothing is lost in the universe. We are going to apply the law of cause and effect, which changes the market trend. Everything is in constant state of vibration. Now we know we are discussing the universal laws. We also are discussing the universal balance points. Now let's see how we can put these two together. Once you receive these points every day, what is the context you can derive from that applying this law? Here we have opened up the chart of Amazon. Now it doesn't matter which chart, if you are plotting these levels which we are showing you within the day boundaries, start of the day, end of the day. The day means market closes and then it reopens. These levels are plotted again for next day. So we are going to use this idea of trend line. Now these are the natural balance points where algos show up, as we have seen. Now can we get better to find out the endpoints? Now it will make all sense how potentially we can use trend lines using these balance point. There's always change. So how do we know a change has taken place? The change, what we describe as change, is the market has to cross these blue lines. That's a change. It was up, it went down. It was down, it went up. So these are the two change points. Right here and right here. All right. Now, we also know the trend line takes into account 2 points. Now, we have to be a little flexible with the trend lines because we are going to curve fit the trend line passing through these change points. And there will be at least one or two. We are trying to detect where the market is heading. Okay, first point, where is market heading? Second thing is, the effective use of trend line is let it break in the direction we want to go and come back and retest using the law of reflection. This alone, you can trade and become professional on ES and other futures, but I'm giving you the concept and I'm going to apply the concept, and then we can see if the concept is holding. We will run some examples. So let's demonstrate this. You have these levels. Change I already described. If you cross this blue point, across this blue point, right? These are the change points. And trend line is going to be starting from the bottoms or the highs or the lows, right? So what we are trying to do is trying to see why did it stop here, why did it stop here. Now I have a lot of approaches to find out which of these levels it will stop. These are market natural rhythm points away from this balance point. The question is, why did it stop here? But if you look at the color of this got reflected right here. So this one is active. See this color? This is overlapping color. This one is behaving to the tick. Then it shifts to different areas. Now if you look at the green one also is there pretty close, but you know what I'm saying? So what we want to do is, how do we qualify these? Now you don't have all these levels, you only have these levels. So I'm giving you a technique how you can approach it. So let's see why this stop was created. Okay, that's the question. Why did it stop here? Why not here? Why not here? And do we care where it stopped if we have a way to take the direction and pick the top? You should not. That's the whole idea. Okay, so trend line, if I tell you to draw a trend line, you will draw something like this, right? Bottoms, bottoms, and many bottoms are touching, and then this line breaks. All right, that's fine. What we are going to do is adjust that using this logic. And it's a little bit flexible because this could be, I told you, when the market is crossing these two lines, this is the balance point we want to use for drawing trend lines. Totally opposite of what you are used to doing. We are not respecting, we are respecting the low, but we're not respecting anything else, right? We don't care what is market doing. I am concerned about in the approach, this approach. If market is going on the top, I need to know why will it stop here or here or here or here, right? This is what I'm doing. Market has gone up. Where will it reverse from? Can I take my puts here? What can I do, right? So this right in the center, market is going up and down, up and down. That's right in the center. It's a little flexible. It could be. So this is what the point is. I said about flexibility. With practice, you will know, and you'll get used to it. So this is a totally unique way of doing things public doesn't know. All right. And then comes the oscillator later, right? So this oscillator, or any oscillator, comes way in the end after your analysis is over. So last thing you want to do is when market is here, you want to go short. You don't, right? Let it wait for it to go up. Okay, so that is one. And we don't know market is here, but we know it happened. This happened, and we draw this line. Same thing. This also happened here. Now this is the second principle. Market goes here, right? We draw it here. So it reflected on this one, it reflected on this one. There's another principle I'm going to talk about, what I just said. The best way to do it, and now this also happened, right? Right there. It is crossing. The change balance point is right there. So now you can see by doing this trend line and passing them through these balance points, if the price has crossed, price has crossed here. Let me zoom in so there's no confusion. Right here, right? This is where it crossed. So I just took in the middle of it. Here market crossed, I took the middle of it. Here market is going up and down. So these two, so this is how the structure is revealed to us. And now we know. Now we have an oscillator going to tell us to go short, tell us to go short, right? Now you know exactly why market is vibrating to these levels, because this is how the internal algos are working, and you don't know all these things as an outsider. If you have never done anything professionally in a big banks and big algo companies and structures, this is where things are. Now you know why we plot this. So from this we plotted this or this and this, and now we are able to qualify it. So probability of success goes up, and now we can understand this oscillator is on the top side, on the top side, on the top side. It makes sense to track these trades. Other option is obviously, as I tell you, go long here or short here. Now we know, oops, how we can find the reflection points to go on the other sides. All right, so now let's apply the examples further so you have no confusion on it. And I'm doing this on Ranko. You can do it on Ranko chart. It doesn't matter. I'm just showing you because I like to experiment things to get better and better and better and better. Okay, there we go. So we got this. So now I can take this out. Now we have learned this. It wasn't that difficult. You'll do that same thing. Now what will happen here? So now I have this top, and I'll apply the same logic. And I haven't shown you what is my own preferred method. This is good. So same thing, market is going up and down here. So now this is a very big area of up and down, right? So initially we don't know. We will just say, okay, it's right here because early morning, this is like around 5 o'clock, going up and down, up and down. So we'll just put it here and leave it alone. It could have been here also, very deeply. We put it here, leave it alone. So that gives us an idea, okay, initially, if market would have not gone here, I will adjust it. I could have gone like this. Nothing wrong with that because that is, now you see this is a rectangle. Middle of the rectangle is right this line. If you take the width here, middle is right there, and you do this. This one gives you this bottom. But this is 230, which is fine. Our contracts are cheaper later. So what other thing I wanted to talk about is here we're trying to pick the bottom. So market can keep going, which is fine. So best thing would be let it go because we are trying to pick the bottom means we are trying to go long. Let market break and go long and come back and retest this line. That is the principle I was talking about right there. This is much safer, but both will work, right? So now this is also one of the biggest trick you can use to do trend line also. Let us put a trend line where it broke it down, came up, came down to retest it, and it held. Now this is how you can curve fit the trend line as well. And it will, this is actually a true trend line. Nothing to do with tops and bottoms, nothing. Totally, all right, different concepts. So, okay, how about picking up other things? Let's try it out. So now we already went through this, right? So how about this, going down to this guy, right in the middle, right? Right in the middle from this is the square or rectangle, just go in the middle like this. Let me plot it so there's no confusion. So this is the square where it went up and down, up and down, up and down. This is the consolidation inside this blue box, the range, and then right in the middle of the range, draw a trend line. And if it gets to it, perfect. If it doesn't get to it, it could have just gone here and came down, which is fine. But now we don't have a confused state of reflection points, why it is stopping and not stopping. I'm giving you this approach, right? Since you are following these blue lines. So it is always good to keep 2 or 3 things. You cannot trade 50 things in a day. You will not. So just pick 2, 3 stocks which are your own vibrations. And if you like to know your vibration details, you can let me know. I need your date of birth and your place of birth and your full name, and I will give you back 33 dimensions of your frequencies. It is free. We have a program to do that, right? And then we also have a huge 500,000 page frequency for each and every stock. So we can match it up and say, this may be good for you. But for now, just hope this one helps you. All right. I'm going to just keep spending a little time on this area only because everything is predictable, right? Nothing is predictable in the sense. This will help you if you can get good entries in the options, right? Probability of success is a little bit much more decent. Okay, so from here, middle is here. So this is what right there. Nothing, market did not reach here. If it had gone here, short was there. All right, now let's go on the other side. So just for you to draw this. So here, go from here, right? Initial part, middle part, all these things. These are all, this is how you have to get a little tricky. So what we have to do is, we'll just go with this one first, right? Somewhere here. This has already happened. Go to the middle. Stay in the middle to be on the safe side. Again, same concept. This is the width of it. This is the middle point roughly, right? It could have been here. So what we need, we are trying to pick the bottom. Let market go down, go down, go down. Let it come up. It could have kept going down. We are still safe. You're not playing the game, right? Now, safest bet is let it come up, break it on the upside, show its intention that it wants to go up, and let's come back and test it again. And if it is holding here, this is an oscillator is ready to go. Now we have a good entry for options. And it's end of the day, you can probably double your money, right? 50%, 100%, you can take care of it. That's all, just pressing the buttons. Question is, when should you press the buttons? All right, how about this guy? Well, let's get the approach going. Do we have something? So either you will just simply, this is the width of it, right? Now initially you're starting there, this is width is going on here, but we are looking for, market has gone down so much. So we're starting early morning like this. If it is holding on the top only, not going down, we can just move it. But now we'll just start from here. Market moved here like this. If you want to go in the middle, it will be like this next day, right? So you hold it. Now this is actually a good trade for the next day. Let it break down. It broke down, come back here, test it. This was a failure. Again, same thing is still holding. Break down, come back to retest it and take off. Nothing is 100%, but this at least gets your percentage much higher than what you currently might be at. All right. Let's look at this one from this high. This could be a true one too. This one can also be a true one too. Let it break, come down. And this is even better because we are at our bank's long level. So let's mark that, right? So you can simply, now obviously you have to keep track and your mind has to reshape itself with doing things differently. Okay. All right, so let's try this last one. We'll pick the high and low. We'll rotate it through this right there this day. Break it, but we're trying to pick the top. Let the top be formed. Let it break down the line. Come and retest it. Perfect. Sometime it doesn't happen. It's okay. Now this may be, well, it's still 2 o'clock. You can make some money still on options. Okay, now let's go through this guy. This is all chop, 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 chop. Some probably news coming. Now, if you just do a square, go to the middle of it. You can just see it, right? It 1, 2, 3, 4, whatever chop is happening right in the square. Let me just draw it so we are not confused. Then that left right in the middle approximation, right? You'll get used to it, and you will know how things are behaving. Even if you do it a little bit wrong, maybe you did this, it doesn't matter, right? And if you want to go short and long, you have this level also support you, but you don't have this level, so let's not talk about it. Right, so reflections are better. First touches also not bad. So if I go down here, right, so this was in the middle, let's keep it that way. Let's do one more trend line. Just draw the lines. Now this one is also in the middle. Keep it drawing there too. Now this is where I was about to say the beginning, end, middle. Keep the edges going, right? Okay, so if I go to the end right here, with the end happened, I can do this one. Ultimately, this one is also not bad right here. This one is consumed, let's consume this one. So idea is very simple, right? Now in this, when I want line to break and come back to me to test it, this is more patient, much more better. It will improve your trading a lot by folds, X folds. All right, so I think you're getting the idea. Now let's do one more. Right in the middle. Initially we are right here. Beginning of it came down here, it came down, right? I keep it there. Now we have 1, 2, 3 precisely hitting the system. Now these are the secrets of the banks. People pay $20,000 a month to get. This is just the scratching the surface. Not even scratching, we're just getting our hands ready to scratch, right? The knowledge goes much deeper and deeper. And I'm just taking a few things I think will help you. All right. Low is still not broken. So let's go again further. Now this one looks like chip chop. That's fine. Let's go here and draw it. We could have drawn it here. We could have drawn it here, right? So right in the middle goes here. If I do this guy right there, when the market went up and down, first one is this, second one is this, third one, they will all hit different things. So what we are expecting? We are expecting market to, this is fine, we want it to go up, right? Break it, come down and break it and reflect on the other side, because we are looking for a top. I want this line to be broken on the bottom side and come back to test it precisely right there. Now, as you see, you cannot do this with 20 stocks randomly. You have to follow. Once you have this system, if you like this approach to finding your tops and bottoms, we already have everything else given to you, right? You can see you have much more effective use case. Now, how about these guys? Well, you can do the same thing here from these tops. Nothing is stopping us. This is where the practice comes into picture, right? So right here, if I pass it to the bottom, same thing happened here. Touch here, right? We can say it crossed above. Well, you're looking for the bottom. It came down. This is better entry. Nothing is random. How about the next one? Right there. Okay, that's fine. What we need to do, we're looking for a bottom. Let it come down, break it, go up, and come back to reflect in the direction we want to go. The direction is we are trying to pick the bottom. Right? So probability of success goes extremely high. But that also needs, you need to have extreme patience. And you only take the best trades possible. We don't want to just randomly take and pick anything we want when we want. So from here, there's nothing to do here. What do you do? Nothing to do. There's no line from here. But you can draw some lines from this guy. You go from here. The first one is here. Second one is here. Third one is here. Logic is pretty simple. See, when I say first one, this area when it crossed, right there. If we do this way, we are looking for the bottom. Let it come down, come up, break it, retest it. Now this one didn't do extremely well, but if you're desperate to trade, there we go. Next one, right here. Next one, right here, right? So I will draw lines like these, right? Now it makes sense. Now you know why these levels are there. Now this line will tell you which level is going to hold. And this is where it is, to the tick. Right? Now oscillator comes later in the end. So this is how market is attracted and repelled through this approach. We can keep continuing to go forward. Now next day we have this guy. We can plot it like this. It never came here, which is okay. And then we plot it like this. And then we have plotted like this. Right? So there's a possibility some days you'll not get there, which is fine. Don't trade. Market, in this huge volatility happened here, everything got expanded for the next day, right? So what we do, keep drawing lines. It's free. Now this happened. Oops. This day, next day, right? This is a square right in the middle. I'm just passing it right in the middle. So it's giving us an approximation. Market came down to this line, bounced from here. Yeah. So again, if you really had to do some trading that day, 8 o'clock, market is not even open for options. You can't do much. This is how it is. Okay, let's do one last one, and I need to exit right here from this guy. Take this guy. You're looking for a top. This is perfect. So we're looking for the top to form. So what has to happen? Market has to assume this is the top, let it break down and confirm it, retest. Now this is where the double top is also coming. It is all about reflection retesting. And precisely to the tick we have this level. Now I've showed you another next level since you are working and watching. Now this can help you take you to the next level. Now when I say go low or below this and long before this, now you can add this value, and then now this guy is already there from previous day. Now this is a perfect trade actually, right? You can hold it. All right, isn't it exciting? Okay, so now that was the first one. Now this one went in the middle, so let's go to the middle one, right? This one, boom, this one, boom. They all have to be tracked. Now this one went to the tick. We never got our other reflection, but market was really booming, booming, booming. It could have gone up and came down, retested it. That never happened, but it happened here. See that it happened, it cracked down and went up. So what's going on here? But if you look at it, move this line to the next one. This is where it is tricky, right? So this is the areas are there. This is also there. So right, if you just make a square and make it pass through the square endpoint, so you get that same thing happen, right? Got this, got this, got this. Or you got this roughly. So in options, you can play with this. Now this happens very fast. Why it is going there? It is trying to reach these hidden balance points which you do not see. All right. Thank you so much. Hope you practice and good luck.